now. Let's bring in Avery Shenfeld, who's the chief economist at CIBC, who's been thinking a lot about this theme and actually has shared a piece for our website, bnnbloomberg.ca. And Avery, obviously, there's a need for a lot of spending right now, but I guess at what point do the alarm bells start to go off?
Well, to me, the alarm bells would be going off if we cut back on that spending and hadn't done that, because then we're looking at not a recession, but potentially a risk of an economic depression. So the slide we've had in economic activity, albeit some of this is temporary, is not dissimilar to the initial year slide that we saw in the Great Depression. And of course, what happened back then was there wasn't a big social safety net, so the people losing jobs cut their spending and it just multiplied down. We really can afford this couple $100 billion, and we might have an elevated deficit next year as well in order to prevent that sort of outcome and give the economy a chance to come back.
So give us a sense. I mean, what should we be prepared for? How big a spending hole are we talking about here?
So we are talking about a deficit this year of something like $200 billion. Could even be above that, because some of the government programs are a bit open-ended. They depend on how many people end up qualifying. And as well, some of them have a very short end date, and there's a risk that if the economy doesn't come back as quickly, or if we have a second wave of contagion, that it forces a pullback from the reopening plans that are now out there, we might need to extend some of the timing for those programs as well. But at the end of the day, the federal government is borrowing at an interest rate of well under 1%. The annual interest costs down the road, therefore, are not large as a share of GDP. And what's true about Canada, not true about some of our competitors in other countries, is we entered this period with interest payments on federal debt as a share of GDP really at an all-time low. So we can certainly afford to carry this future interest burden, and really that's the price that we have to pay to keep the economy from completely falling apart.
Let's just talk about what we have learned from history and what has been applied and what is uncharted territory, Avery, because not unrelated to what you're talking about, we do have some recent historical context. You go back 10 years ago, the response to the financial crisis, and we saw that playbook dusted off pretty quickly this time around. But that was, I mean, the concept of shutting down the economy and then just figuring out how things play out depending on the health crisis, that's a lot more unusual. So in terms of what the government, the fiscal response looks like right now, how much of this is just sort of as we go?
So this was a remarkable, actually, transformation of government policy in the space of only a few weeks. And I give credit to both the Canadian government, in fact, Washington, which normally doesn't work very quickly at all, worked pretty quickly on this. This is a much larger response than we saw governments do in the financial crisis recession. But this was a much bigger decline, initial decline at least, in GDP than we saw in any of these countries, whether it's Canada, the US, or Europe. So the medicine has to be scaled to the disease you're facing, and this is certainly a massive economic shock. So really, we're off the charts here in terms of the initial shock. But what we're hoping here, and what's different here, is that while this stimulus money, some of it can't be spent because people can't go out to a movie even if they wanted to, we're creating a buffer that hopefully will allow the economy to also recover a little bit faster as we do permit more of these activities. But we're still facing a pretty long road. Based on what the epidemiologists are telling us, even if we want to restart some economic activities, they will have to be constrained by the number of people we can allow on any given premise, how close workers can be, and the fact that there are some things like travel and so on that aren't likely to really get going until we have a vaccine or a cure.
And I would imagine, Avery, I mean, at the end of the day, while some people are going to be supportive of all the spending, some will be skeptical and critical of some of the spending, I would imagine we're only going to know in the end what was the most effective way by which the economy was assisted. I mean, is that fair to say?
Well, in economics, unlike science, you don't have two petri dishes, one in which you put a treatment in and one you don't, and you see how it goes. So even in hindsight, we'll look back and have to dissect the data, but we'll certainly be able to compare countries that did more stimulus, countries that left those unemployed or their businesses hanging a bit more, to see how that worked out. And I suspect that we're going to see that we did a pretty good job under the circumstances, not as good as countries who caught the virus earlier and therefore didn't have to have such a severe shutdown. But relative to countries in Europe, for example, that didn't have the wherewithal to launch this sort of stimulus to the same degree, I think the outcome will be better.
Avery, good to get your perspective. Thanks very much for spending some time with us this morning. Avery Shenfeld, Chief Economist at CIBC. And you can see his opinion piece on our website, bnnbloomberg.ca. Check out the BNN Bloomberg